Overcooked is a relative term. Some people like their steak rare, some people like it well done. So it's a relative term, but it's hard to argue with how the markets are responding to inflation. Stocks coming off their worst week since October. And the one I really want to pay attention to is the Russell. That down 4% for the week. We often call that the reopening index, and we're also seeing this variant. Are people's inflation concerns warranted?
So it depends on whether your outlook is short term or longer term. As a financial advisor, I'm dealing with folk and their long-term plans for their goals and the things they want to achieve in life. And so if we're looking out over the long term, no, there's no need to be terribly concerned about what we're currently looking at as inflation. Year over year, the 5% number, yeah, that's a huge bump. But when we look at the trend line, we're running about 2.2%, which is barely above the target that the Fed set for what they like for inflation.
So, Lee, I don't know. Where are you at right now? What town are you in?
I'm in Atlanta, Georgia.
Atlanta, okay.
Atlanta.
I'm from
Go
Philadelphia,
Hawks.
but we're up here in New York. Everybody likes to drink coffee, but we want you to read the tea leaves. So you're saying inflation's only slightly, I know, inflation's only slightly above the Fed's target, but they already said that a rate hike could be coming as soon as next year. Right now, the markets are not responding well to even the idea of a rate hike. So how are we overcooked on these concerns if there's a good chance one's coming next year?
Well, so I think that the overcooking that I'm speaking of is you hear people talking about rampant inflation, runaway. I'm in that camp that thinks, yes, there'll be some inflation, but transitory. And so there are some people that suggest that it won't be transitory. We're starting to see some things that, in my opinion, leads me to believe that we're not looking for an extended period, particularly high inflation. It's not down to where it needs to be, but for example, the housing market. Things are booming literally here in Atlanta as it relates to housing. Part of that is lumber prices. Well, we finally seen that lumber prices have come down a little bit. They're still 2 to 3 times what they were pre-COVID, but that's one of those things that says, hey, listen, at some point we're going to get beyond all of these inflationary pressures, this backlog. I mean, today is Prime Day, and happy Prime Day to everybody out there. But you've got some people that are concerned about the ability to fulfill orders. But as we get beyond some of these things, I think a lot of the pressures that are creating some of this inflation will subside over the next 6-7 months.
Yeah, a lot of people are concerned about those supply chain issues. So if I'm concerned about those supply chain issues or I'm concerned about inflation, where can I put my money right now? Do you have any thoughts for those people out there who don't think all these concerns are overcooked and don't think the word of 2021, transitory, is how to describe it?
Okay, so there are a number of places that candidly you should always have some of your money that respond well to inflation. You can take a look at areas like real estate. Let's look at areas like commodity and those companies that benefit from commodity. If you think about last year, if you owned oil, your portfolio lagged. You got hammered because we shut down. But then as we started to get needles in arms, so to speak, oil looked really, really good and performed quite well. Another area that people who have more of a conservative bent and they're concerned about inflation, take a look at TIPS, Treasury Inflation Protected Securities, as an option for your portfolio.
Shepard Smith here. Thanks for watching CNBC on YouTube.